Alright, good afternoon everyone. Today is Friday, September 28th, 2012. I believe today is the last day of the quarter. Is that right? Let's see, we have today results. We were down one gold trade. We're break even on the NQ, and we were down a Russell trade. I took a crude oil. Did I say break even on the crude? Break even on the NASDAQ is what I meant. I took a crude trade during the break, and I ended up plus on that. So I'm up 5 ticks crude. I'm down 8 ticks gold. I'm down 7 ticks Russell. Here's Russell. I'm even on the NQ. Here's crude oil. And here's gold. Okay. Those were the results from the morning session. If you haven't taken a free trial with us, go to www.cfrn.net/apply. With the free trial, you get all the indicators and charting platform and data feeds that you see here, and you get 5 business days in our live trading room. In the live trading room for 2 hours per day, all right, where we can teach you all this stuff. Now, in this morning's recap, I'm going to show you guys something a little bit different, okay? Normally I just go over all the trades that we took and all the trades that set up and all that stuff. It's all the same as every other recap that I've ever done in the last, several months. But what I wanted to point out to folks was the yellow line, right? The yellow brick road, as some people would like to call it. Let's see. But in my opinion, okay, that's what I was just going to do here, Frank. You read my mind. Oh wow.
You got to read what he wrote. This guy's quick-witted. I think we need to get him on the show.
Okay. Well, I only read the last one. I didn't read the whole top one. I read the last one, but
I'll read it when you're done.
Okay. All right. Here is what we have. Okay. I'm just looking at the yellow brick road right here. Okay. When we break the yellow brick road, which means when it changes directions, okay, first there's the bounces off it, like here. This is crude oil, the 4-tick range crude chart, which is what I had originally brought the yellow brick road to everyone's attention for. All right, the bounces off of it. Okay, you see all these right here? Those are all bounces off of it. I think so far one has not gone. That one didn't actually hit it right there. I can slide it over right there. 2 now have not gone more than 4 ticks when it closed in the direction after the touch of it. Okay, it's doing it right now. It's just about there to touch it, and we would need an up close here. It doesn't get much simpler than that. Okay, but to add to that, let's look at when it actually changes directions. When the yellow switches from below price to above price, times like these. Let's start back here. Okay, right here where it switched directions, and we could do it right over here where it switched directions. Look at the move down. Then obviously the move back up and bounce off it, and bounce off it, and bounce off it, and then it switches directions. Okay, when it switched directions, look at that move. All the way up there, then it came down and bounced off it. Didn't put in a higher high. Then it switched directions. A little move down right here. Now, where would you put your stop is the question, right? I would say a stop on the other side of the BBC would be, in most cases, would be enough. And this is the 4-tick crude chart, okay? I mean, you can go through and look at all this again and again and again and again and again. But, you see it right here when it switched directions, all the way down. Right here it switched directions, up. Right here it switched directions, and it didn't go anywhere this time. Where's your stop? Right up here. So let's say you get in down here after the down close down here at 91.70. I would risk 8 ticks. Maximum 8 ticks is what I would risk. So my stop would be right here. I'd get stopped out with 8 ticks. But look at the gains over here. Let's say you get in right here, 91.76. That runs up to 91.92. Over here you get in 92.05. That dropped all the way down here to 91.55. That's 50 ticks right there. That's $500 a contract. No, it's nothing to be ignored. Okay, you see it just did it right here. Instead of giving us a bounce up, it switched directions right here, and you can see it's just dropping off right there. Okay, I wanted to bring that to everyone's attention. For those of you who have never taken a trial with us, have never seen our indicators, have never been in a live trading room, you're missing the boat. Take the trial; it's free. I'll show you this on a different market too, just to show you that I'm not biased or stuck to the 4-tick range crude oil. Here it is on, this is the NQ from this morning. Okay, every time it switches directions up, switches directions down, switches directions up, switches directions. This one right here didn't go as far, but it did go down. Switches direction up, switches directions. This one didn't go very far. Switches directions, switches directions. And those were just the direction changes. Now, once you get a direction change, then you still have all the bounces. Okay? Sure, Frank, I would be happy to look at the ES. Let me find my ES chart. Now, this one right here is the 4-tick range ES. Let's put that bad boy on there. Good. Okay, here's the 4-tick range ES. Switches directions and down. And we didn't have much movement this morning. Right in here. We didn't have much movement until just recently. Okay, where it switched directions and it went up. In this case, you probably wouldn't need to have that much risk. I would keep my stop on the other side of the BBC. Okay, that's what I would be looking for. But this is a 4-tick range ES. Now, you're looking at the same things as far as when it bounces off it. It bounced off it right there. Bounced off it over here. This one didn't go right. Bounced off it over here, and it eventually went down. It needs to come down and bounce off it over here. The ES is, well, it's a little bit different because it's been so narrow most of the morning today. Okay, but when it does switch directions and there is some momentum in the market, it does do it. Now that's the 4-tick range. I'm sure you probably want to look at it on, let's look at it on a 15-minute. Uh-oh, that can't be true. Okay, let me go back to the 4-tick range and see if it lets me do that. Alright, let me try to go to a 30-minute again, or a 15-minute. That is weird. Alright, I can flip to hang on, I can just go to something else here. This one I think will let me go to a 30-minute or a 15-minute. Yeah, there we go. Okay, here it is on the 15-minute. You see it just came up here and tested it for the move off. Over here, where it changed directions, it moved down. Now it's tested it, and it's moving down off of it. Okay. That's more along what you wanted to see, right? Over here, it changed directions, and it moved up. Over here, it changed directions, and it didn't go anywhere. But this one, it changed directions and went right to the other weekly trading zone. Okay. And you wanted to see a 30-minute. Let's see. Here is the 30-minute bar right here. Okay. Switch directions over here and move down. Switch directions over here, and it went sideways for a long way before it finally moved up. Okay. Switch directions over here, and it moved down. There it is on the 30-minute. Okay. Yes, inspired. And you can look at it in other time frames too. But I'm not going to spend, the normal 20 or 30 minutes that I usually do jumping around to every single trade setup. I'm just going to, I just wanted to highlight this a little bit for you all, so you can appreciate what we've done. Let's see, I'm going to flip this back to a 10,000 contract now, and I showed you that thing on the NQ. I showed it to you on the ES. I can show it to you on, well, here, I'll show it to you on the Russell. For those of you guys who like to trade the Russell, it's pulling back right now to the yellow line. All right, so if it hits the yellow line and gives an up close, that's likely to have good results. Right here, this is the last time it hit the yellow line. It dropped down 20 ticks. Okay, over here it broke it, and it went sideways most of the way, but eventually went down. Okay. You can see here, broke it and moved down, broke it and moved up, broke it and moved up, and broke it and moved down. This one didn't go as far. Now, the idea is to get your stop to break even as quickly as possible in these things. So, in something like this where, you know, it gives the up close right here, this is where I think the close of this bar right here is where it would have been, changing directions. Okay. So your entry would have been 36.9. This is a 4-tick range. It didn't go that far before it turned back down. Again, this one would have stopped you out. Some of them will. What time are we talking about here? Right after the open. It's the ones like this, the runners, and that's what Dwayne was talking about earlier. The runners like this. If you can catch, you know, 1 or 2 runners like that per day, and you can minimize your stops, then that is the name of the game. All right. All right. That is that. I think I'm going to wrap it up right here. All right.